We're talking portfolio maintenance today, guys. We had a lot of questions recently regarding the big move down in the market, 20% plus for the NASDAQ. Individual stocks, obviously, way more than that for some of them. So let's talk about how we can rebuild or reposition our portfolios and take advantage of this downside move after what has been a pretty difficult year for portfolios.
Yeah, and look, I think once a big down move has happened, like if you prepared for it by diversifying that, did or didn't, we're not here to talk about that because we're here to talk about what you can do right now. And I think you keep things very simple because trying to pick what to start nibbling into can get a little bit tricky. And I'm going to sort of come to the cues here and just simply say, if there's an index or an ETF that you're looking to get into, if you like tech, then go with the cues. If you like the semis, that can be your play as well, or maybe even a safe stock like Apple. But I'm going to stick with the Qs here because once you get the breach, which has happened now, like a Qs just got back above the 50-period moving average, now you've got momentum to the upside. So if you didn't pick it up at the bottom, and if you did, fantastic. But if you're now saying, I think there's a bit of a relief rally, I want to start building a position that I can feel comfortable with. So start with something that you want to hold for the long term. The broad market, SP 500, the triple Qs, a good ETF that you happen to like. And once it makes a bit of a break and shows you a little bit of strength, start nibbling into it. And I'm not saying, okay, boom, we're through the 50 period, let's go long, let's hold it forever. No, just whatever your position size you want to put on for that long term, that you want to commit to tech stocks or to the Qs or whatever ETF it might be, just get it 10 to 20%. You do that, you tell yourself, okay, well, either at the next quarter I'll come back or the next month I'll come back and put the same amount in, put another 10% in, or you can do that in front of support. I think time buying helps you to do. The thing about getting in at regular increments, you're not always trying to pick prices. I get it. We are making a moving average break and there's some momentum to the move, but in this particular situation, pick something simple that you're comfortable holding for a long period of time and just start nibbling into it. Don't try to get too picky. The market continues to go down, you nibble again in a quarter, you nibble again in a month, and you're not trying to pick the bottom. You're just trying to build a position that you can hold to ride the storm for the next 10 years.
Yeah, I mean, that's really the idea here that we're trying to get to is how to rebuild your portfolio, right? And so some suggestions, like Neil was saying there, anything that maybe you got out of early, you could get back in now, hopefully at a better price. That's one suggestion. Or, and I think there's a good example today here with Nike, right? And that is that check to see when earnings are coming through on some of the stocks that you like. And I mean, if you like Nike, then you don't need to step in, and take a falling sword here. You can actually, now we're trying to rebuild the portfolio. So wait for the company to come out and guide forward or, give a better report than maybe you thought. Today, Nike came out and said, we were down here to 125, a nice little bump up today, up 3%, up to 133. So again, they came out today and sort of said, they're not too worried about the supply chain. Their issues are, have nothing really to do with China or anything like that. And they actually didn't even really guide forward. But the point of what I'm getting at is they didn't negatively put anything out there, right? And I think that's kind of what you want to wait for. You did see today, even like with a CCL, Carnival Cruise, like maybe you like to be in this name, but again, they reported this morning and now it's up 0.63%. So wait to get into some names, let them report, let them come out. And if the CEOs are honestly giving fair guidance and it seems like you understand the report, you trust the business model, that this is when you start to get back in. I mean, the last thing you want to do is get in front of a name and say, okay, like tonight, Adobe's reporting. That's a great name that we like. But, not getting in before the report, all right, because we don't know how they're going to guide and what it's going to look like. So we wait for the report to come out. And you know what? If we missed the 5 or the 10% or something like that because we didn't get in today, oh well, we're building a portfolio. So if we had to buy Adobe on an upswing, hey, Brendan, at least we're catching a stock that we want that's given us reasons to buy it.
Yeah, great points. Understand when major events and catalysts are taking place. Understand as well what your time frame is and how long into the future we're looking to hold these positions and start building, guys. That's the key. Start building, but have a plan, obviously.